Thank you, listeners, for joining us today on Ask the Expert. My name is Rob Butler of Sprott Money News, and we are very excited to have the pleasure of speaking with David Morgan this morning. David Morgan is a widely recognized analyst in the precious metals space, industry, and consults for hedge funds, high net worth investors, mining companies, depositories, and bullion dealers. He is the published author of Get the Skinny on Silver Investing and featured speaker in investment conferences in North America, Europe, and Asia. With this, I am pleased to welcome David Morgan this morning. Hi, David.
Hello, Rob. Nice to be here.
We have a number of questions that have been submitted by our clients and precious metals followers, so with your permission, I'd like to get right into it.
Let's go.
David, can you please explain why the silver to gold ratio is roughly 57 to 1 when historically it's closer to 15 to 1 and comes out of the ground at 9 to 1? And also, do you believe silver will ever go back to its historical average relative to gold?
Okay, let me answer the last part first. Yes, I'm on record in the early 2000s as saying I expect the ratio to narrow back to the 16 to 1, which is actually the classic ratio, or the monetary ratio. That was an edict or a set ratio between gold and silver set by man, not by the market. And then why is it at 57 to 1 now when it comes out of the ground about 9 to 1, which are both correct. The market basically is where it is, and it doesn't really upset me that it's not in the 16 to 1. I think it's an opportunity. If you look at the last bull market, we have basically three major phases. You have undervalued, fair valued, and actually overvalued relative to paper money. That happened last time. Will it happen this time? I don't know. What I do know is we're still in the undervalued area right now for both gold and silver. If you look at what happened in silver in 1979, it started the year at about 6 and ended the year at 50, or the beginning of the next year. So year over year, 1 year, it went from about $6 to about $50, round numbers. So you're looking at about an 8-fold increase. And that took place in 1 year, and yet the bull market started basically in 1965. So I expect something similar this time. So for silver not to be at 16 to 1, or what I chose, I haven't stated it yet, I think 10 to 1 is where we're going to see it peak. And I could be wrong, but that's what I believe. And so to get there, we're going to see the acceleration during the final phase of the bull market when people that are asking Sprott Money these questions are already invested fully or well invested. And they'll be watching from the sidelines as the latecomers are jumping into the gold and silver markets hand over fist and can't get enough. And they'll just be watching this ratio close further and further and further. So I hope I'm clear. I expect it to happen. I expect it to happen in a brief period of time. And I don't expect to see that actually taking place probably for a couple, 3 more years. Now, you will still the gap narrow. In other words, it started at 80 to 1 or 57 to 1. Which means that silver has outperformed gold so far in this bull market, and I believe it will continue to do so. I think I have far more upside in silver, but nonetheless, it will take time. It's not going to happen in 2013, 14, probably 15 or 16 when you see it really accelerate relative to gold.
What's the general makeup of your portfolio and assets? Meaning, what's the percentage of physical gold, gold-related stocks, physical silver, silver-related stocks, etc.?
All of that's information that's in the Morgan report. Basically, when you buy the paid membership, and just the basic one is like $130 a year. I mean, it's $10 a month. Almost anyone that's a serious investor can easily afford that. We're talking about 2 cups of coffee a month. So in there is the top tiers, the mid tiers, the growth stocks, the speculations, and how to use the Morgan report. I go through that question about what's the correct ratio for how much gold to silver, how much physical relative to stocks, and all these are basically individual answers, but to generally outline it, excuse me, the older you are, the more you would favor gold over silver, and the older you are, the more you probably favor physical over equities. But it depends who you are. Again, I have guys that are in their 80s that are practically all physical. I have guys that are older and they have almost no metal, which I don't advocate, but that's their choice. So it boils down to the individual, but that's all basically spelled out in how to use the Morgan report and some of the information that you get when you're a subscriber. It would be much too difficult to go through it all, but I will say this, I am debt free, and I think that's important, especially now because this market has been sideways for quite some time. So to go into debt to buy metals, I really still don't think it's a great idea to do that.
The gold-silver bulls regularly report that the world is on the brink of a monetary system collapse. They report shortages in the gold and silver inventories, increased demand from Asia, bank runs in Europe, and many other factors that are supposed to be bullish for metals. Yet the price of gold and silver seem to be range-bound. With all these factors in favor of high gold and silver prices, what have been the price and why has it been stuck?
All right, well, I agree with almost everything you said other than the shortages. There really hasn't been any shortages, except for the bottom in 2008 during the financial crisis. There were shortages of retail products. Shortages when you have a demand and it can't be met in any way, shape, or form. And that was true of like 100-ounce bars and silver rounds and silver eagles and that type of thing. And that didn't last very long. There was still plenty of silver relative to silver demand. It just wasn't in the correct form, and that was silver bullion, which is actually what I ended up buying at that bottom. Nonetheless, everything else he states is true, and there's two reasons for it. One, whenever you go parabolic like we did in April of last year, and you see the market move from 26 to 48 in a short, several weeks time frame, you're going to get, and especially since they're futures markets and they're paper trades for the most part, you're going to see a big oversupply. And until that oversupply is worked off, the market can't go up. Second thing that happens is the manipulation. Now, the main trend can't be manipulated. The main trend for gold and silver is up. But within that trend, when these characters come along and they sell like a year's worth of supply in less than one day, in other words, a few trades, obviously it's going to knock the price down. It's going to take time to repair that damage, and that has been done continually in the silver market. So that has an effect as well. And it's a psychological effect, more so than it would be a physical effect. The silver supply is still rather tightly held, and there's not a lot of people that are in the silver market physically that are keeping up their positions. But nonetheless, since it's a futures market determined price, in other words, a paper-derived price, that's why you see discrepancies like we saw in 2008, where you had silver selling at less than $9 on paper, but if you wanted to buy it off of eBay or even a reputable dealer, you're paying about 30% premium. And so that's two markets, and that's what happens. And so I expect that could happen again. Nonetheless, that's the reason. Is it going higher? Yes. Is the overhead supply worked off? Answer, not yet. But it will be. I think we're going to see a higher price in probably the 35 to 40 by the end of this year. And then in 2013, I do expect nominal prices to go into new highs, meaning 50 as a nominal high. Inflation adjusted, you'd have to see like $135 silver to be a new high in real terms. Nonetheless, I expect to see in 2013 probably conservatively $65 an ounce by the end of the year. I'm going to give myself a whole year or so. Roughly a year and a quarter or so, what we already have left in this year. So the bull market, in my view, is still strongly intact, but this overhead supply is weakening. A lot of the shorts are out of their positions. The setup is pretty solid from here on. Normally we bottom in August. We'll see. I think the bottom is in on the metals.
Is it true that the investigations into the rigging of silver market have suspended, and somehow has this affected what spot values are trading at?
Well, there's mixed, there's a kind of a rumor put out by the Financial Times that there wasn't enough evidence to really follow through on this last 4-year investigation. And then after that, Bart Chilton, who's the commissioner, came out and said that's not true. I don't know where they're getting their information. So as far as I'm concerned, it's still ongoing. I do think they'll put out some type of written publication defining what they find. I quite frankly think that they will, quote unquote, find something, but I think it'll be so vague, ambiguous, and really something that doesn't address the serious issues that have taken place over the last several years. But nonetheless, if the mainstream media looks at it, it'll probably be kind of whitewashed. That, oh my goodness, look, this happened in the silver market. Geez, what do you know? So that's my guess. Several have written about it. You can probably spend a whole day reading on opinions about this. You can have mine for what it's worth. It's just as valid as any other opinion, but no one knows until it either happens or it doesn't. I just have the view that you can't really look to government authorities to correct anything now. You look at what's happened to financial markets. There haven't been any convictions at all in the financial markets under the Obama administration. And I'm not picking on him, just stating a fact. Even under Bush, there were like 42 convictions for financial fraud, banking system, and brokerage system. And there are none now. It just doesn't make any sense. So I just don't have much hope that there will be anything done at a high level that would correct any of these problems.
I have purchased silver rounds from reputable mints, Sunshine, and then others. If and when the time comes, will I have an issue selling them back?
No, silver is silver. Silver is fungible. Fungible means that an ounce is an ounce is an ounce. I don't care if it's got a government stamp on it, a Sunshine Mint stamp on it, a kangaroo or a koala bear. It doesn't matter. Silver is silver. So you shouldn't have any problem selling it back. And most of the high premium stuff will lose their premium at the high of the market, or as we're approaching the high. So that's something to bear in mind. Now, there are people that just want to buy eagles or maples or something with the government stamp, and that's fine. I understand that, and if that makes you the most comfortable, and they are the most liquid. In other words, you're not going to have a lot of problem convincing somebody this is real silver if it's got a U.S. mint on it, or a Canadian mint on it, or an Australian mint on it, or a Euro mint on it. And so, again, if you want to pay that premium for that peace of mind, go ahead. But really, when it comes down to it, it's fungible. An ounce is an ounce is an ounce.
Except for an official announcement, hasn't the US dollar already lost world reserve status? Do you expect an overnight revaluation of the US dollar, similar to what Roosevelt did in the 1930s? Or do you see a gradual sell-off in the US dollar as Europe resolves and it becomes apparent that our problems might be unsolvable?
Great question. Yes, I agree. I think that really the de facto standard is that the U.S. dollar has lost reserve status. You look at how much has gone on in the last 2 years between Russia and China saying they'll trade for each other's currency, China and Japan saying they'll trade for each other's currency, and there's several others. So the dollar has been usurped in those cases, and so it continues. So yes, it's probably has lost reserve status, or is continuing to lose it. It's still kind of hanging on, so to speak. Do I expect an overnight revaluation or a steady, not so steady, but a declining dollar? Kind of both. I don't rule out an overnight one unless there is a currency collapse that gets out of the hands of the authorities, which it easily could. In that case, they'd probably close the banks, have a banking holiday, revalue it to some artificial peg like oil and gold, or who knows what they'll come up with, and revalue it, or maybe they'll go to a global currency, which I think will be extremely difficult to do right now considering the political climate. So I actually see it more the same. A trend in motion continues, and the trend is a lower and lower dollar, and everybody's competing against each other's currency to make them go down, not up, not to be strong but to be weak, to gain an export advantage. So these are complex issues, but it's easier to predict that the trend that we have will continue than to say there'll be a bank run or a bank closure and they'll issue a new currency. However, the guys playing the game at the top, the paper pushers, the banking elite, they're smart. They know what's the inevitable. And so they are probably prepared to do an overnight, revaluation if necessary. I certainly wouldn't rule that out of my thinking, and I'm sure that they don't either.
Currently, I have physical access to my silver, which is safely stored, but have considered transferring my silver to a facility for the ultimate security. My question is, with all the financial turmoil in the U.S. we are experiencing, as well as in the rest of the world with the possibility of a total collapse, if my silver were stored in an offshore facility, how difficult would it be to have my silver delivered to me physically?
Well, I think he answered his own question, or she. It'd be very difficult. So that's why what I teach is, depending again on the individual, if you're high net worth, and I think unless you're in an apartment or whatever, you should keep some you have available to you. And of course, gold is so compact. I mean, you can have a great deal of purchasing power in a small space with gold. Silver, of course, is going to take up about 60 times as much room for the equivalent of purchasing power. Regardless, I would not put too much offshore. Could you get it? Probably. Would it be difficult? Most likely under the outline that he wrote. So balance it out. It's pretty simple, common sense stuff. I'm sure he already knows that. He probably just wants verification on my part. As far as storage, if you are in an apartment or you're elderly or you have a vacation home and your other home is, most places you can still hide it pretty easily. So that's a consideration. I just feel more comfortable being able to go get a bag of silver whenever I want it, and know that in the worst case scenario I've got something that's easily recognized as money, since that's really what it is, and could be used. And I say could, not would. We don't know, but could be used in the event that I had to.
In several interviews, you've stated that silver would probably reach the $40 level by year end and not hit new nominal highs. Would your outlook change should the Federal Reserve and the ECB engage in a massive, coordinated monetary stimulus program?
No, it wouldn't, and this is opinion, they're asking me for that. I think that part of that's already built into the price. I think what's announced, you would, or if it's announced, and it probably will be, we'll have to see what happens after this Jackson Hole meeting. But I think you get a nice blip. I think there'll be a lot of gold, silver bugs that either want to add to their positions or waiting to get in, or momentum players that will jump on the news. And I think it'll fizzle out. I'm not looking for that particularly to move the market on the announcement. Over time, absolutely. So I don't want to be talking out both sides of my mouth, but I don't see it having a run that it had before. Let's just go back and I'll restate a little bit. Silver really had run from 19 to 26, and I put that on my advanced trading service where you get to see exactly what I'm doing. I was looking for a breakout at 19. We got based at 18 for month after month after month. I said, once we get above here, I'm going to go long. And we did. And it rode up to around 26 and was starting to stall out. And actually, I'm pretty sure got out of that trade. And then QE2 was announced, and I got right back in. I'm not afraid of making a mistake. I mean, making $7 in a futures contract is a pretty good move. But if I wouldn't have got back in at 26, I would have missed the 26 to 48 move, which I did not. But that's what QE2 did, 26 to 48. Will that happen the next time they announce a QE3 or 4? And, no, I do not expect that. I expect, again, a blip and a consolidation and probably a backing off, and then over time more of a steady state. Now, any major problem that no one could predict, we've all talked about possibilities, could send the metals on a run. We just don't come back. But those are rare events. Those are black swans. They could happen, and if that were the case, then obviously you'd want to have your position now. But that's my take on it. I wouldn't get too enthused about a QE3 announcement taking the metals far higher. I just don't see it.
Bemused and confused by an ongoing conflict in the silver arena. On the one hand, we have had general consensus that the amount of silver left above ground has been diminished drastically, and the cost of mining has also increased drastically. The amount of silver being consumed in industry has grown exponentially, according to most pundits. Governments and private miners are still producing enormous numbers of silver coins in stamped bullion bars for sale. So therefore my question is twofold. How long will the powers that be allow silver coins and bars to be minted? And if so, do they stop mintaging of coins? What will happen to those, like myself, holding various amounts?
Oh, great question, and it's part of the confusion in the silver market. It's partially right, so I'll do my best to make this succinct. From 1990 to 2007, we were in a silver deficit. We used up 1.5 billion ounces of silver above ground, so the supply of silver above ground in 1990 was 2 billion ounces. By 2007, it was 500 million ounces. Again, 1.5 billion ounces was used up during that time frame. So from 2000 roughly until present day, the amount of silver coming out of the ground has risen not exponentially, but it's been substantial. And the amount used by industry has grown linearly, not exponentially. So the above ground supply of silver has actually grown. So there's more above ground supply. So let's go back and use the numbers. The amount of silver above ground that hit its low mark in 2007 at roughly 500 million ounces of silver in bullion form, and probably about 500 million or slightly more in coin form, for a total of 1 billion. Right now, from 2007 to 2012, 5 years later, we have about 1 billion ounces in bullion only, and about 1 billion ounces in coin form. So we have 2 billion ounces. So now in 2012, we're roughly at we're at 2 billion ounces now. I'm sorry, I got to go back and explain that the 2 billion ounces above ground in 1990 was bullion only. So we've got half as much bullion, but a lot more coinage that could be converted to bullion in 2012 than we had in 1990. So the point is that the silver supply has grown over the last several years, not diminished. That was a fact for 16 consecutive years, but it is no longer true, and it was no longer true as of 2007 onward. So that's the reason that there's the ability to mint. And there's a lot of people that recycle silver. I mean, silver is recycled at the tune of almost 200 million ounces a year. A lot of it does end up in the landfills. That's another misunderstood thing. I got a woman at a conference one time, and she wasn't really mad at me, but she was explaining to me that silver isn't recycled. I said, I'm sorry, ma'am, but it is. It's recycled to a great degree. A great deal is not, but a great deal of it is. So I hope that clarifies it, because again, this is one of those type of questions that unless you pay me for my work or read everything, I think this is probably in the public domain somewhere. I've written so much for free, but that's the facts. So, and then if that worries you, say, oh my goodness, silver isn't in a deficit anymore. They're actually adding to the supply year after year. If that bothers you, think about this. There's roughly a 6-month supply of bullion above ground right now, maybe a little bit more. But there's a 40-year supply of gold above ground. So if you're going to worry about how much above ground supply there is of the metals, and you consider them both to be monetary metals, then I would be much more concerned if there's a 40-year supply of gold above ground when there's only maybe a 6-month or longer supply of silver above ground. So I'll end on that.
If the metals market is being manipulated down, how can precious metals ever move up? Money printing such as QE, Operation Twist, etc., would seem to allow for a great rise in price as global fiat devalues paper money. How do you lose control of the manipulation?
Yeah, well, I believe that the market is manipulated, but again, I've gone on record many, many times. First time at the Silver Summit several years ago, when Al Corlin got, I think, 4 of us up on stage and asked that direct question. And I stated then, and I continue to state, the market cannot be manipulated for the long-term trend. The long-term trend is up, and that's why the price is much higher now than it was in the year 2000. Because you cannot manipulate the price day after day after day. If you could, silver would still be at $5 or lower. But within that trend, you can smash down the price again and again and again, and that's what's taken place. And when you do that, a lot of people that are on margin lose faith, so they get taken out of the market. And a lot of them never return, and they hate silver, or they hate me, or they don't like whoever wrote about silver got them in the first place, which is their own idea, even though maybe they read me and that was an impetus to do it, or Mike Maloney, or whomever. Regardless, the point is that the trend can't be manipulated, but within the trend, certainly it can smash it down, and it can cause a psychological shift. And could you read the second part of the question, because there's more to it than that?
How do they, in quotes, lose control of the manipulation?
Oh, great. Yeah, that's the most important question. The only way I've seen and I've written about and talked about for years is that the way that it gets lost is that paper doesn't equal silver. So basically, everything that sets the price, everything you hear about is based on a derivative. It's a derivative of the physical silver market, but not the physical silver market. Again, if we look at history, the physical silver supply at the bottom of 2008 was very, very tight, and was really a shortage in, again, the retail market. The silver rounds, silver eagles, silver maples, 100-ounce bars, 10-ounce bars, those type of things. So that's what will happen, and I think it will happen, that you'll have the inability of the paper market to meet the demand of the physical market, because paper doesn't equal physical. So once that happens, I think you could have a real feeding frenzy, because what will take place is monetary investors will be buying physical metal, and industry can't use paper through their processing plants either. I mean, Dow Chemical, DuPont, Mitsubishi, Apple Computer, all these companies that absolutely 100% have to, must, it's an imperative, have silver, will see that the supply is drying up, and they don't carry much inventory. They carry some, but not a lot. And so then there'll be 2 demands on silver. Or there'll be industrial demand and monetary demand, and that'll feed on each other. So once that happens, and I wish I knew when, I tell you to the day, if I knew, no one knows. That is what will break the manipulation. So what you'll probably see is what you saw in 2008. You see a price if you want silver, and you see a price in the futures market, and they won't match. And there'll be a very good reason for that. Paper doesn't equal silver. I know I've said it 3 times, but repetition bears memorization.
It is a known fact that all major banks have held excessive short positions on silver for years now. Do you know how it is that the SEC do not take them to task over this blatant market manipulation? And is there any chance they could be squeezed into covering those positions simultaneously?
Well, there's a couple of presuppositions there that we all know that. And I would argue we probably don't all know that. First of all, the SEC is probably not their purview. That's an equity situation. So it's probably the CFTC, and of course that's under investigation, so that's kind of a crummy answer for this person that asked. But we don't know their total position. I've had this discussion with Ted Butler at times. They could be, we know pretty much from the bank reporting that Ted was the first to bring to the fore, and I commend him for that. but also the commemorative traders, which again Ted was probably above anybody as far as bringing that to the attention of all the metals heads, all the silver and gold investors. Nonetheless, all we know for public is what's in the commemorative traders in this bank position reporting. What we don't know is what the over-the-counter positions are. So for an example, you could be Bullion Bank A, and Bullion Bank A has a net short position in the commemorative traders report, but they might have a net long position through a foreign bank, some other bank, and their net position is actually long, not short. And now that is a fact? No, but it certainly could be the case. So we don't really know what their true positions are. We do know what they are publicly, but that doesn't mean that's their total position, because these other positions they don't have to report. As far as the SEC, it's out of their domain, and as far as the CFTC, well, I've already kind of answered that at the beginning of this interview, that I really don't expect anybody at that level to really do much of anything meaningful. I hope I'm wrong. I hope I'm surprised. I hope they come out with something that's extremely accurate, pertinent, and has some teeth in it, but again, I doubt it.
What's going to happen with all the precious metals acquired by the wise when the paper money is worthless? People cannot exchange the precious metals for paper money.
Well, I'm not sure I understand that, but I'll give it a stab. I mean, that's a total zero where the paper money goes to absolute zero. Normally from history, it doesn't go to absolute zero until most people have gotten out of it. In other words, as things unwind to that extent, you'll see a lot more contracts that will be given off in precious metals. I'll buy your land for X amount of silver. I'll purchase your house for X amount of gold. You can work for me for so many ounces a week. You'll see more and more of that coming to the fore. And if you followed my work closely, and others as well, I think I've kind of been one of the leaders on the remonetization of silver. And, Hugo Salinas Price, certainly have to give him credit for doing it for all of Mexico. I've sort of spearheaded what's going on here in the U.S. with this bill that was passed in Utah where you can exchange gold and silver for anything in the state on a voluntary basis. And there are about 12 other states that are doing the same thing. It's not illegal to buy things for silver right now or gold. So I think that's what would happen more. And again, going back to the currency side, will it go to absolute zero? And the answer is could. Again, before that happens, usually these power freaks, these control freaks, they'll usually stop the currency. And going back to an earlier question, they'll just stop it. They'll either a bank run will force them to do it, or they'll close the banks on some weekend and come out the next week with an announcement, we're so sorry this has happened. It's those rotten speculators in the gold and silver markets. We don't know what's wrong with these people, but we're going to have to issue this new currency and blah, 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 blah. And I'm kind of being a bit facetious there, but that is also what could happen. So I have been asked that many times. I don't see it going to absolute zero, but close enough. It's close enough now. If you had someone that had a great genetic pool and was 100 years old, and had adult memory from age 1 through now, and saw the $1930 worth about 3.5 cents right now, they'd be screaming. They'd be saying this thing's worthless, more or less. But we've all gotten used to it, even in my age group, gum was like 10 cents a pack when I was a kid, 5 or 6 year old. Now it's like $1.30 for gum. Are you kidding me? So, that just shows you. But people, gums, they just, and new people that are just entering the workforce, they don't have a clue because they never had to earn a living. So when they start to earn a living, then they start to look at prices a little more diligently, and then it goes in their memories. Anyway, I'm probably drilling too far on that question. Why don't we do another one?
As I am middle-aged and have held silver bullion for many years, in your opinion, how long should I hold it for? I was thinking 3 to 4 years. I would like to hear your thoughts.
Okay, well, it kind of is a nice piggyback on the last question. So basically, if you think there's going to be a currency collapse, you should probably hold some in the event that happens. If you are willing to cash out when silver is overvalued, and I think it will be, and gold as well, I think 3 to 4 years is about the right time frame. No one knows these things, but the average commodity cycle is 17 years. Gold's bottom was about 2000, so that would indicate 2017. Silver would ride along with gold, or actually probably accelerate and outdo gold. In fact, I believe that strongly. And it could even peak a little bit before, although last bull market they peaked basically on this, very much the same day. This time, it could be different. So yeah, I think 3 to 4 years is a good time frame. I don't think you're going to have to wait 10. Having said that, I just want to add one thing. If you were, whatever age, it doesn't really matter, grandparent, parent, college student, you wanted to put something away for the next 30 years. Now that's a long time horizon. I'm not saying grandparents want to. I'm thinking of grandparents thinking about their grandkids. I really thought this through, and I think silver is probably, physical silver, one of the best you could do. The reason being is the supply, even though it is increasing, as I said earlier, is still short relative, or smaller, I should say, relative to gold. And there are so many innovations for silver on an annual basis that I think long-term, I could be wrong, but I think long-term silver still is a good long-term investment. Nonetheless, I expect, however we get through this financial conundrum, and we will, that silver, short-term is going to overvalue, and at that time you should be looking to take at least partial profits. I know I will be. As much of a silver bull as I am, when silver becomes overvalued, I'm going to be looking to buy, I don't know what, land, stocks, businesses, hotels, I don't know. But when it gets overvalued, I'll be looking for getting into something else that is undervalued.
Well, David, on behalf of Sprott Money News, I appreciate your time this morning, and I'm sure our viewers will find it very informative, and thank you very much for making the time today.
My pleasure. Thank you.
All the best.